Hello and welcome to our market alert video, a special one for today. And that is because of the big market sell-off that we had today, and wanted to kind of put that in perspective and give you some of the reasons why it happened in case you don't know. So I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we work with people who are over 50, who are retired or retiring soon. And if that's you, then make sure you check out our podcast. You go to our website as well, rpoa.com. It's all there for you. So let's talk about that. So DeepSeek is a Chinese version of ChatGPT. And they announced that they were able to produce a product that is very competitive with OpenAI. And the claim, which seems a little far-fetched right now, so we'll have to wait and see, is that they can do it for 100 times cheaper than Facebook and OpenAI and all of our top technology companies. And if that's the case, then all of this cost that is built into the $500 billion program that Donald Trump announced, all of that is like too much money. It shouldn't cost that much. And so that kind of scared the market into thinking, my goodness, we thought we were the preeminent artificial intelligence economy, and yet now we're seeing that maybe China has caught up with us and maybe is going to overtake us, and maybe our technology companies are overvalued, and so because of that we saw a big sell-off. Now, the claim seems to be a little too exaggerated, 100 times less, really. They claim that they don't use, and the thing that makes it interesting is that we have not allowed them to buy the chips because we don't want them to overtake us. And yet they did it without the chips that are supposedly needed, Nvidia and others. Well, there's a lot of speculation that they are using those chips anyway, even though the boycott and is supposedly keeping them from having those. So we're going to have to get more information on all of this to see if in fact this new AI that China is telling us they've developed is in fact as good as it is. Now, we all know that in the past, the information that we get out of China, we have to kind of take it with a grain of salt because it isn't always as it appears. So we'll have to wait and see. But it is a revolutionary thing, no matter how you look at it, and a shock to the system. And that's why we saw this sell-off, because whenever there's uncertainty, people take their chips off the table. And right now it's possible that our big tech companies are overvalued because they are doing things inefficiently versus what we just found out DeepSeek can do. So we'll have to wait and see where that takes us. In the long run, it's good news because any productivity in AI will make our economy more efficient. Our productivity will be better. And if you have higher productivity, you have higher standards of living and those kind of things. So it's not a negative necessarily in the long run, but right now that's the excitement. So we'll have to see what that does. It's interesting, we also saw the bond market rally. Why? Well, because if people are scared, guess what they do? They buy bonds. And so if there's a demand for something, the price goes up, and that's why we saw bonds rally with this news. So overall, not a reason to panic at this point. The technology arena, especially AI, is very volatile. It's brand new and it's changing rapidly, and we're going to get a lot of shocks to the system as it develops, just as we did with the internet back in the Y2K, etc. The important thing, though, is this. Having a strategy to protect yourself on the downside, we view as extremely important because the stock market right now is very highly valued. A large percentage of its value is in these large technology companies. And if they take a big hit, then it's going to take the whole index down with it, just as happened in Y2K when the market went down almost 50%. Why? Because 37% of the S&P 500 index at that time was technology stocks, and they went down 90%. So 90% of, let's call it 40, is a 36% drop in the market, right? If it's so overweighted in that area. And that's not far different than where we are today. We are very, very overweight in the big 7 technology companies. And if they take a big hit, if they go down 70 or 80%, like what happened in the past with technology companies, we could see the market go down significantly with it. So that's why in our firm, we believe that growth is important, but protection of principal is even more important. And that's why we have a sell strategy. We call it invest and protect. It actually told us to sell in November of 2007, before the stock market crash of 2008, and told us to stay out actually for almost a year and a half during all the carnage that happened then. And then, of course, as you guys know, back when the pandemic hit, it also told us to get out and protect against that. So if you're over 50, these are tenuous times. They're good. We don't think anything really bad is coming, but we don't know. And so we plan for the worst and hope for the best, have a strategy to protect. And if you don't, check us out. As I said, you can hear our podcast and you can see our videos and our articles on our website at rpoa.com. So I hope this video finds you healthy, wealthy, and wise and gives you some perspective on what's going on. So thanks for watching, and we'll talk soon.